I was talking to a couple people in the industry whom I idolized last night, and GOAT kept coming up. GOAT kept coming up.
Referring to Jensen Huang.
Greatest of all time. And there are some people who are very cheery about knowing him because we know that he's ethereal, we know that he's not a bus, and we know that he carries himself like a gentleman, and it's ethereal.
Do you think he's a bigger visionary than Elon Musk?
Yes.
You didn't hesitate?
Yes. And I tell you why. Because in the end, I do believe that that's technology on wheels, and I think that Musk can see around the corner. But I think that Jensen is thinking about a legacy of changing the entire paradigm about the way the world is. Jensen is creating single-handedly an industrial revolution, and Musk is creating single-handedly a way to be able to deliver things. And those are both brilliant things, without a doubt. But to create an industrial revolution yourself, to create the loom, to create the train, to create the steamboat, who does he think?
Coming up in today's review, S&P hits a record high on the back of Nvidia's earnings, which just broke a record for the biggest daily market cap gain. The street more bullish than ever. Japanese stocks and European stocks hit new highs. The ECB says Bitcoin is worth nothing, and Reddit files to go public. Hey, what's up guys? Welcome back to the Click Capital Daily Market Review on what has been probably one of the most craziest days on Wall Street I've seen in my 20 plus years of trading. Absolutely monster moves, led by the biggest AI stock in the world, Nvidia. After their blowout earnings yesterday, we all knew they were going to beat. However, they gave the most rosiest guidance possible with their revenues and profits absolutely exploding. And so congrats to the call option buyers. You beat the option sellers at their own game. Option dealers were priced in at about a 9-10% move, which was between 620 and 745. And so we actually ended up closing 40 points higher than that today at 785 with a 16% move. So all those people piling into call options were rewarded handsomely. And the volumes today were absolutely off the charts. And that spilled over to the rest of the market as well. There's Nvidia coming in at a whopping huge 66.1 billion shares traded today. And I'm pretty sure that is an all-time record for the amount of traded value in any given stock on one day. Not only that, it spilled over to super microcomputer, 24.1 billion shares traded. And just switching over to the biggest gainers for the day, wasn't only massive volumes, also some massive moves. AMD up 10%, Marathon up 7%, Novavax up 22%, CleanSpark up 10%, Supermicro up 32%, Wayfair up 10%, and the list goes on. So there is some crazy action going on in this market. Same deal in options, almost 5 billion worth of notional volume traded Nvidia call options today. Supermicro 1.5 billion, with both of them coming in above the S&P 500, which normally stands head and shoulders over just about every other stock, except for Tesla, which usually comes pretty close. And it was a busy day overall in the options market. 46.7 million contracts traded, 58% of them calls, and that has got everything moving, including the S&P 500 breaking out to all-time highs here, getting up to almost 5,100 today. And it was a broad-based rally with a lot of participation. We can see that in the equal weight S&P breaking out as well, and the equal weight Nasdaq. Even mid-caps joined the party. Russell 2000 not so much. And with the release of Nvidia earnings, the market being repriced, we saw a huge volatility crush. The VIX falling down to 14.5. We still have a bit of a divergence with the VIX and the stock market, with the S&P breaking out to new all-time highs and the VIX not breaking out down to new all-time lows. That's because looking underneath the hood at most stocks, they've been in a correction this whole year. Amount of stocks above the 50-day average, peaking out just above 90%, and it's been in a downtrend for the last month and a half, closing today at 63% of stocks. But all the action is in the mega cap tech stocks. We can see that here of the composite chart of the 6 largest stocks, up a combined 7% today to new all-time highs. And there's a look at super microcomputer, screaming back up to $1,000 a share, along with AMD popping back up close to its highs as well. And just look at that heat map. What a huge rip in the semis, and bright green all over the tech sector, software stocks, even financials had a good day, along with cyclicals. But looking across the rest of the market, energy, REITs, and utilities more so, a little bit weak today, and what has definitely been a rotation out of defensives and even more into growth. And so just to put this into perspective, the kind of moves we're getting today out of Nvidia, it basically just added an entire Netflix to its market value. That is in trading today. It added about 267 billion in its market value. That's more than Netflix's current value of 254 billion, which is a huge global company in itself. And no doubt, Nvidia deserves a huge move. The numbers they've been putting up, growth rates and guidance are all off the charts as well. The capex spending boom in AI is real, and Jensen Huang has done a great job not only in his business, but also in stirring up investor excitement and optimism about the future as well. With him saying accelerated computing and generative AI have hit the tipping point. Demand is surging worldwide across companies, industries, and nations. And that's a confirmed record for the biggest daily market cap gain ever for a stock, which was only recently broken by Meta few weeks ago when they added 204 billion on one day after their earnings. And so it's no surprise Wall Street is more fired up than ever about how high Nvidia stock can go. Just looking at the new price targets from Wall Street banks and research companies, we've got Morgan Stanley now at $7.95, Citi at $8.20, Wedbush at $8.50, Susquehanna at $8.50, Craig-Hallum at $8.50, Oppenheimer $8.50, and a bunch of others at $8.52. Classic Wall Street herding around the same price. So no one's standing on a lone island and looks stupid. With a little higher from Goldman Sachs, $8.75, HSBC $8.80, with a few at $1,000, and one firm willing to take the lone island risk, Rosenblatt Securities, $1,400. So the message from Wall Street is clear. Nvidia's AI party is far from over. All the big banks and research houses have price targets above where we're trading now, which is about $785 a share. So most of the street is around up here, $850, going up to $900, with a few above $1,000 all the way up to $1,400. And the momentum in this is so strong. Like I've been saying for a little while now, Nvidia could easily hit $1,000 a share this year. Trying to short this thing is like trying to step in front of a steam train. And it's easy to see why Wall Street and traders are getting excited with Nvidia. The growth rates and numbers they're reporting are huge. Gross profit margin, 69%. Net income margin, 42%. These are trailing 12-month figures. Seeing the same thing with their growth rates as well, with revenue and earnings growing triple digits. And so just doing an intrinsic stock valuation analysis to get a look at the market's assumptions for why it's trading where it is now. Basically, the market is assuming over the next 10 years, revenue will average about 30% growth per year. Net profit margin will be about 30%. Then the terminal PE ratio, that's the final PE ratio in 10 years' time, will be about 25. And just looking at the current Fed funds rate, which we use as a discount rate of 5%, gives us a fair value around $800 a share, where we're pretty much trading now after hours. And so like I always say, capitalism and the stock market's kind of like that game, capture the white flag. It's very rare that a company stays at the top for a long time. Looking back in history, some of the top 10 companies in each decade, some of them are gone bust, some of them are still trading below where they were 30 years ago. And that's because a lot of companies, they reach maturity in their growth cycle and they're kind of built on a certain set of talent, infrastructure, systems, assets, things like that. Then a newer, more fresh, more modern, more hungry player comes along and captures the white flag. So whilst anything is possible, this would be another record again if Nvidia can maintain these really huge growth and margin rates every single year for the next 10 years. No doubt in the next couple of years, they'll probably beat these rates. However, with their margins currently around 70%, that's basically just waving the white flag in front of everyone else in the industry, or who could be in the industry, saying, look at me, come and get it, because there's just so much money to be made. And so it's very rare that any company in any industry can maintain those high profit margins for a long period of time. Because like all new technologies, it eventually becomes commoditized. And so these H100 GPUs Nvidia is selling for $40,000. It's quite possible in 10 years' time they'll be selling for $400 with dozens of big competitors doing it. And that's what we're seeing. There's a huge gold rush to build these GPU chips. And even though Nvidia is clearly out in the lead, the real question is for how long will they retain that lead? And even if they can retain the lead for many more years, what are their profit margins going to look like? Because if I just change the profit margins from 30% down to a still healthy 20%, we see fair value drop to 538. And if I were to drop revenue growth down to a still healthy 20%, then fair value goes down to 252. And what happens if we were to see interest rates go higher? If I took the discount rate up to 8%, which is still only a little bit above long-term averages, then fair value goes down to 194. So there's a lot of assumptions in Nvidia's stock price, and for sure it could go higher. Like I said, it could easily hit $1,000 a share this year, as there's so much short-term momentum, liquidity, and optimism in the market. But the thing is, at the end of the day, it doesn't matter if you're the best Wall Street bank, if you're the most knowledgeable person in the semiconductor industry, even Jensen Huang himself. No one knows for sure exactly what their revenue growth, net profit margin, and interest rates are going to be over the next 10 years. These are all just assumptions. The whole market just trades on assumptions. Then we get really big moves when the assumptions turn out to be a lot different from reality. But the way it stands now, their business and the stock price is absolutely on fire, and that's spilling over to other parts of the market and other semiconductors as well. And not only other parts of the US market are we getting a bit of a halo effect, we're also seeing that around the globe. In the world's third largest economy and stock market, that's Japan, with its index breaking out to a record high, the first time in 34 years. The last time the Nikkei was this high was way back in 1989. And Japan, which has a good tech industry, AI, and they're big into robotics as well, those stocks have helped push their index up to new highs, and there we can see it on the long-term 3-month chart of the Nikkei 225, just getting a bit above 39,000 here today, taking out those highs from 1989. And so that was a lost 30 years in the Nikkei, even had a peak to trough drawdown of 82%, which took 20 years to get to, even worse when you adjust for inflation. And just looking back in history, what does this chart look like? Anyone want to take a guess? This is the Nikkei, which starting in the late 60s, early 70s, had a huge 20-year bull run, climbing 1800% before it went on to that big 20-year drawdown. And just looking at the Nasdaq index, over the last 20 years, it's up even further than what the Nikkei got back in the late 80s. It's up over 2,000%. Nikkei was up 1,800%. So no one knows exactly when we're going to hit the top. However, it's different this time because of AI, right? We've also got European stocks breaking out to multi-year highs. And so a bit of this bullish optimism and momentum spilling over to global equity markets. We can see that here in the long-term monthly chart of the Euro Stoxx 50 ETF, breaking out to new decade highs, but still a bit below the highs it reached way back in 2007. So we've got a bit of a funny macro backdrop to all this action. We've actually got some of the world's biggest economies currently in a recession. United Kingdom, Japan, most of the Eurozone just about to be confirmed in recession. So their economies are shrinking. At the same time, we've got stock markets breaking out to new all-time highs. And so it's an interesting dynamic in world markets this year. Is the US economy going to catch up to the rest of the world economy? Or is the world's economy going to catch up to the US? Or are stock markets already discounting the recessions and getting excited by lower rates? Or is this a head fake before we have a truly global synchronized recession with the US going into recession this year? And that's a hard question to answer. Like always, we won't really know until it happens. This also comes at a point at a time when we've seen the Fed do the most aggressive rate hiking cycle that hasn't resulted in a recession in the US economy, or the stock market being knocked over in a meaningful way. And we also have the possibility of rates climbing even higher this year. We've already got credit card rates breaking out to all-time highs. And we have been getting some hot economic data prints of late as well, with potentially more to come in next week when we get to see the first revision to fourth quarter GDP, followed by the Personal Consumption Expenditures Index, PCE, Fed's preferred inflation gauge. And just like Tom Graff, the chief investment officer at an asset management firm, says what we're all trying to do is figure out how long the economy can remain this strong with interest rates this high. And it's a good question. The economy could possibly outgrow the pain of higher rates, but it'd have to put in some really good numbers. We have to see economic growth above that of inflation, and we've still got core inflation at 4%. So if the economy can grow above 4% consistently for the next couple of years, I mean, it's technically possible. The growth could exceed the problems of higher rates. It's just not probable looking back in history. And so with unemployment at record lows, stock market ripping to all-time highs, still a lot of cash sloshing around out there. It's no surprise we've got treasury yields moving higher as well. You can see that in the 2-year government bond yield getting to 4.72 today, and the 10-year shaping up nicely as well on a bull flag sitting at 4.33, which is keeping the pressure on bond prices. And moving on to Bitcoin, we've got the European Central Bank saying Bitcoin's fair value is zero, and the latest boom will spark massive collateral damage. Some pretty strong words from one of the biggest financial institutions in the world. They're saying it's worth nothing, and the approval of ETFs in the US doesn't change that. They also said crypto poses risks to the environment and enables criminal activity. And once again, where crypto ends up and how to view it is probably even more confusing than the economy and stock market, because we're still getting harsh words like this from large governments who want to see it dead. And we'd been seeing the same from SEC's Gary Gensler, who was trying to kill it. The US government not really offering a clear direction one way or another. But then the SEC did approve the ETFs, kind of bowed down to Wall Street pressure. And now these Bitcoin ETFs have over 10 billion assets under management, just a little over a month of trading, with BlackRock's iShares the number one, 6.3 billion AUM. And so the question is, does Wall Street getting their hands around it now, does that help it go further? Or does it just allow them to take the other side of everybody else left holding the bag? And considering it doesn't have any real life practical utility, no one's using it to buy their bread and eggs, nor does it yield anything like every other productive asset, like a farm that yields a crop, a business that yields a profit, a bond that yields an interest payment. Bitcoin's totally based on the greater fool theory. You're going to buy it today because you believe you can sell it to someone else at a higher price because of the perception of its value has changed, nothing relating to its yield. And so to say it's hard to predict where this thing goes is an understatement. Just like Nvidia, this thing could rocket up. We could see 100,000 this year. However, I also wouldn't be surprised to see Bitcoin trading under 10,000 within the next 2 years as well. It really is anybody's guess where this thing goes. And the popular social media network, the host of Wall Street Bets, has just filed for their initial public offer, taking the company from private to public, trading on the stock exchange. And what great timing from this guy, the CEO, Steve Huffman, right in the midst of this craze with stocks ripping up. Absolutely perfect time to offload some shares to the public. No doubt they'll get gobbled up and trade at a premium. They'll be looking to get that done as quickly as possible. And even though last year the company posted a net loss of 90 million, in this current market, that's not likely to matter at all. It's all about the story and hype and how many people can pile in on top of one another. So that should be a favorite of the meme traders and all the option traders as well. No doubt there's going to be a lot of volume coming into this new stock soon. And again, it could be another sign of the times. And as we're just about to wrap up Q4 earnings season, just looking at the blended earnings growth rate for the S&P 500, coming in around 3.2%, giving us the second consecutive quarter the market has reported year-over-year growth in earnings. Looking at year-over-year revenue growth, that's set to come in around 4%, bit below the 5-year average of 6.9%. And would you believe it? It's actually real estate out in front with 7.9% year-over-year revenue growth. And tech actually coming in number 4 after communications and healthcare. And there we go again in the Fed Fund futures market. Once again, increasing chances the Fed will remain on hold, even looking out to June. And what a crazy change in markets it would be if the market had to start pricing in an interest rate hike in a couple of months if we got some hot CPI prints. No surprise the stock market is extremely greedy, sitting here at 78. But once again, corporate insiders are selling into this strength, collectively offloading hundreds of millions of dollars worth of shares every day in this current market without doing much buying either. Another little divergence in the market, high yield bonds kind of trading sideways, not breaking out with this risk on sentiment. Dollar index just holding above 104. Gold forever consolidating around $2,000 an ounce. So look at crude oil shaping up a bit here as well. Maybe look to take a stab at $80 a barrel next week. Getting a continued bounce in Chinese securities. And like I've been saying for a few weeks, I'm pretty sure this is a bottom and potentially a generational bottom as well, as we've already moved up about 15% from the lows we got to late last month. Bit of a divergence in clean energy though. Got PBW sitting at lows here, really going the other way of the market. And so clean energy is really sensitive to interest rates. And so if interest rates were going to get cut, then this sector could rocket. However, looking at yields today, maybe clean energy is pricing in for rates to stay higher for longer. And who knows, maybe even get a hike, which would send this even lower. However, if you are a patient long-term investor, these moves lower can make for great opportunities to dollar cost average DCA periodically into short-term price weakness throughout a bottoming process that could take months, potentially a year or two longer to form. Looking at international stock markets, we've got Canada's TSX breaking out, FTSE still consolidating, big rip in Germany's DAX, China 50 index looking good, Nikkei still on a tear, and the Aussie 200 consolidating as well. Big turn down in value versus growth. That's still looking to find a bottom. Semiconductors, the winning sector today, up 6.8%. Thanks to its biggest holding in Nvidia. The other hot sectors this year, still performing well, home builders, industrials breaking out to a new all-time high, and financials breaking out as well. With the gold sector the worst performer, and miners still breaking away from the underlying. And just going down to a 5-minute chart of Nvidia after hours, we are trading up more. $7.94. Looks like we'll be hitting $800 a share tomorrow. We've got others like Meta looking good as well, hitting all-time highs today. Similar look in Amazon, Alphabet climbing back, and Microsoft and Apple the weakest of the bunch. Did find support there in 180 on Apple, where it had turned a number of times before. And Tesla still trying to hold on and defend this 190, much weaker than the other large stocks. There's a look at ARM Holdings. That popped up today, but actually lost its opening gap, closed on the lows. And just like Supermicro Computer, that's still below its all-time highs, but we may get a retest of that tomorrow. And going into the weekend on a Friday, things can definitely heat up, so tomorrow's trading is definitely going to be interesting. And these other hot stocks bounced back as well. CrowdStrike, Vertiv, Wingstop, and once again JP Morgan breaking out to new all-time highs. Alright guys, there we are. What a day. S&P 500 ripping up over 2%. Nasdaq up almost 3%. And once again, Nvidia just blowing us all away. And the market's just so good at doing that. When you think things can't get crazier, it just goes ahead and gets even more crazier. And I've seen this time and time again in the market. Things can just go much further and for much longer than what we all think it should do. And so like I said, I wouldn't be surprised to see Nvidia hit $1,000 a share. Who knows, maybe in the next couple of weeks on a melt up, because the momentum and volumes in this thing seems to have gone parabolic, and it's anybody's guess where we find the top I'd say we're going to need a really big kind of blow-off candle and formation before this thing can actually turn around. Interesting times indeed. Thanks very much for tuning in to the Click Capital Daily Market Review. Appreciate all you guys that hit the like button and leave a comment, and I look forward to bringing you another review tomorrow night. Cheers.